Good afternoon, good evening, good morning, wherever you are. It's a pleasure to have you here at the 10th annual Business Call to Action event. My name is Marcus Nitu. I am the director of the United Nations Development Program SDG Finance Sector Hub. We have a fantastic session for you today with a great panel to talk about the resilience for small business as part of this event today. Let me start by saying that we all know that small and medium enterprises are the backbone of any country's economy. They represented 90% of all business and 50% of all employment worldwide. But they have had historical challenges in terms of, changing its business models to digitization, access finance, and having any other strong capacity to grow, especially in developing countries. COVID-19 has aggravated the circumstances and make it much more difficult for small enterprises to go forward. We know that in Asia, for example, almost 30% of all SMEs are about to lay off 50% of their workforces. We at UNDP are working very hard to support and to make sure that SMEs are able to survive this current crisis and are able to then be a very strong partner in building back better coming out of this crisis. Primarily, we know that just yesterday, in partnership with the International Chamber of Commerce, the United Nations Global Compact, Microsoft, DHL, and PricewaterhouseCoopers, we launched a COVID-19 private sector facility, which aims to bring together private and public actors at both global and national levels to co-create solutions together that are tailored to the phases of the COVID-19 pandemic and the specificities of each local level. We have developed and been testing a series of investment maps that can allow global investors as well as national investors to see the opportunities to invest for the SDGs, including how to come out of this pandemic. In partnership with the United Nations Capital Development Fund, we are supporting MSMEs with grants or loans at concessional rates. UNCDF has developed a fully online process to provide relief grants to SMEs within 14 days. We also have a partnership with long-standing partnership called the Connecting Business Initiatives, in which we are providing business networks with guidelines and financial support during this pandemic crisis. As I said, it's very, very important to us that SMEs have access to information, finance, and are able to, as we are now coming all to you via digital technologies, the SMEs are able to transform their operations and their business strategies in digital to be able to survive. In that sense, we have developed an online SME action platform as a one-stop shop for SMEs to overcome the challenges brought by the pandemic, combining resources on preparedness, response, and recovery. The main objective of this platform is to provide free, of cost, and easily accessible support to SMEs during this crisis and in the aftermath. This crisis provides us with a challenge and provides SMEs tremendous difficulties, but it's an opportunity. It's an opportunity to transform SMEs' operation, to support also SMEs, and to come out of that in a much stronger, with a larger growth of market and as a part of building back together. Now, enough of me, because we have a really great panel here. And the way we're going to do this is that, you are going to meet your four panelists in sequence. They are going to introduce themselves and they are going to have, 2-3 minutes to share the thoughts, the initial thoughts. Then we are going to come together on a gallery view, and I'm going to ask them some questions. And then hopefully by that stage, you will have your questions as an audience that I can take it to them. So let me start it with Andrea Castano from MasterCard, and then she will be followed by Dr. Nasser Al-Qahtani by Intan, and by Giovanni. So, Andrea, over to you.
Wonderful. Thank you, Marcus. Good morning, good afternoon, and good evening to everybody. This is such an important topic, and it is just a pleasure to be here. My name is Andrea Gilman. I am the Senior Vice President of Global Small and Medium-Sized Businesses at MasterCard. The focus of my role is to develop global products and solutions spanning payments, cyber, and data to meet the needs, which are today very pressing for this really important community. And what we're looking to do essentially is to democratize access to tools and capabilities and learning and training that have long been the domain of larger corporates. And so the way that we see it is very much in line with how Marcus kicked this off, which is that small businesses are the backbone of our communities and our economies across the globe. They are representative of 90% of all businesses and 2/3 of employees, and they contribute significantly to the world's GDP, in many markets upwards of 50%. And the time really is important to be talking about this now, because as we have all seen watching the news, that the effects of the pandemic have been absolutely devastating. And so we feel very compelled to act. And so what MasterCard has done is first and foremost pledged to a target of bringing 50 million micro and small businesses into the formal economy. And that includes 25 million run by women. And then in April of this year, we really doubled down on that commitment and made a pledge to contribute 250 million worth of technologies, capabilities, services, training, and philanthropy to small businesses across the globe. And we'll be talking about that today. And so we really are strongly held in our belief that as SMEs strive to thrive in this economy, they have to first survive through the pandemic and figure out how they will rebuild themselves and what will that look like. And so we are really focused on enabling them in three key ways beyond payments, which is first and foremost helping them get cash in the door and helping them get paid. Secondly, helping them get access to capital. And thirdly, helping them become more digital and transform. And we do this through a variety of partnerships, as well as through our customers. So really looking forward to talking about this with you today. Thank you.
Dr. Nasser, the floor is yours.
Yes, good morning, good afternoon, good evening for everybody. My name is Nasser Al-Qahtani. I'm the Executive Director of AgFund. I'm really happy to be speaking to you today in this session and discuss AgFund experience in supporting MSMEs during COVID-19 epidemic. As you probably know, that AgFund operates 9 financial inclusion banks in the region, namely in Jordan, Yemen, Bahrain, Syria, Lebanon, Palestine, Sudan, Sierra Leone, and Mauritania, with a portfolio it's worth $117 million. That's the start. Our AgFund initiative started to open a microfinance bank to include micro and small, and particularly poor people in the financial sector. That started in 1995. With a partnership, after we have done lots of microfinance. You probably remember MicroStar. AgFund was working too closely with UNDP to do a MicroStar. Mid-1995, we find out that MicroStar will not be sustainable unless we create banks and so on. Thanks God, the way we do it since that time until now, we help countries where we are exist to support them to have a national financial inclusion strategy, start by micro loans. And we find out while we are doing this, that's people, poor people, lower income people who start micro and small business need loan, of course, but they need more than loan, which is saving, remittances, insurance, etc. The way we've been doing it since 2006, the first bank we started just doing micro credit. But by the time right now, we have most of our clients have access to insurance, remittances, saving, etc. And what we did since then, we believe that as everybody is saying that SMEs is the engine of the economy, we believe in AgFund that the micro business is the fuel for the engine. Without having a micro, we will not have small and medium. And this is where we want to highlight this evening with you. So we create what we call graduation, which is including people in the first loan. Then if they have an idea about, they're doing business, we give them the first loan to be micro, and then with building their track record, they could be, moving from informal to be formal, etc. During the epidemic, as we are in 9 countries, that means we work in a different area. AgFund create what we call AgFund Technical Assistant Unit. That's virtual, and we doing facing the challenge where we work. There is a lot of challenge, especially when we're talking about working in Sierra Leone, Yemen, Syria, Sudan, etc. And I remember even before COVID-19, we faced such a challenge during the Ebola in Sierra Leone. That's happening when we find out that we have to help women at that time. How can they become a small farmer, to move them to have a micro business, how they can have loan, and how they've been trained to grow a sweet potato. At that time, we're talking about 2014 to 2016, when we trained them to grow more sweet potato. As you know, sweet potato is have a vitamin which help prevent their children and their family not to be blind. So that time when we during the COVID-19, we already have been trained those people in Sierra Leone. And our partner, Helen Keller Foundation, is helping during the COVID-19 to bring more women to have access to more loan and saving and etc. The way we did, we called for a meeting for our CEO, and we met the challenge, and we did have a unified approach to micro and small business owner. How can we help them to survive? We find out during this is that those people, they are in need of helping them too closely to understand their need. So saying that, the first thing we did, of course, postpone the client installment for 3 months, expandable to other 3 months. This is one of the way we make them a little bit relaxed. Of course, we did this after we did all this with our employees. They make them ready to be connected with their family, to be connected with their client. The loan, we continue provide the loan. We did not stop not to give him loan, even if a little loan, but we have to understand those people in need of help and advice and moving them toward digitalization. Of course, you know that we've been in AgFund helping them be in digitalization and use mobile banking. And wherever we allow to use mobile banking and digitalization, this is better situation than the one we could do it. Where is the challenge we face? The more challenge we are on the ground, the more digitalization we do it. The best microfinance bank, 100% digitalized our bank in Yemen. We find out when we met with everybody that we find out our bank in Yemen ahead of everybody. Even we do have a virtual currency, and we're doing a lot, and we have more than 8,000 point of sale to be, deliver the remittances for all the about. We even create a new product offering to a client to keep up with the pandemic, especially when they're moving to a track business model to allow, SMEs and open mobile branches, and we help them to go online, etc. Back to you, Mark.
Thank you very much. Intan, the floor is yours.
Thank you so much for the time, Marcus, and hi to everyone. I feel really humbled to share my little experience in helping SMEs in Indonesia compared to what the other panelists doing, to be honest. I'm Intan Kaplistiwa, currently handle business strategy and marketing in Indonesian fintech company called as Awan Tunai. So probably let me share to you who we are. Of course, I mean, for the audience to get better understanding about our business, yeah. So the key purpose of Awan Tunai is how to provide affordable working capital for micro merchants, because we know that they contribute 80 and 90% of Indonesian economy until right now. But unfortunately, the banks still cannot penetrate fully to this segment because lack of credit history, underwriting data, and also highly operational costs. This is a very risky area that causing micro merchants cannot afford even a days of inventory and trap themselves into informal lenders that charge them with huge interest per day, like 1 until 5% per day. So the key is how to provide affordable financing for our micro merchants that we want to solve. And then the main question is, how do we try to transform these complex conditions in Awan Tunai? Our growth in Indonesia really supported by our good relationship with wholesalers, or we call it as the suppliers in internal terms, to reach underserved community. They not only inventory provider for our micro merchants, or what we call as a warung in Indonesia, but also as a lender for them. So instead, we try to replace them. We try to accommodate these wholesalers by offering upfront payments, so they don't need to give informal lending anymore and can focus to manage a better cash flow. This is basic our business model at the moment. The strong relationship also combined with robust technology, implementations, and also data capture can finally create our affordable financing. By implementing on-the-ground systems like order management platform and also payment app store, we can create highly risk predictive model to unlock the wealth of offline data traditional supply chains. Then we can convince our bank to publish affordable finance and capital for our micro merchants. That powers accessible low cost of financing can potentially helping more than 3 million warungs in Indonesia across areas. So from our side, actually, still a lot of homework, especially enrich our risk model, expand our different segments. Also, we have a lot of homework in terms of technology implementations that fit with our market needs. And of course, collaborate each other to continue create a bigger ecosystem with banks and also lender. But to be honest, our spirit is really high right now, because since we built this model since last year, we see very positive growth in terms of acquisitions, retentions, and also transactions as well. And even we see a very positive, call it as a positive growth during this pandemic that makes us believe actually our innovations can help bigger communities. So yeah, hopefully my explanations can give understanding how we work at Awan Tunai at the moment. And thanks for the time, and back to you, Marcos.
Thank you very much. Giovanni, the floor is yours, and then we'll come back all together.
Thank you, Marcos, and thank you everyone else for joining this online session. It's really great to see the connectivity here. Also, thank you for my fellow panelists for sharing their experiences. I now realize that all my talking points for the introduction have been commented on, so I'll try to keep it as short and as sweet as possible so that we can get over to the questions. I'll share a quick slide so that everyone can follow along with me. I'm Giovanni Centeno. I'm an investment manager for the Seed Capital and Business Development Program at the Dutch Good Growth Fund. And to give a little bit of flavor, in 2014, DGGF's Seed Capital and Business Development Program was co-created by the Dutch Ministry of Foreign Affairs, Triple Jump, and PricewaterhouseCoopers to further the impact of the Dutch Good Growth Fund, both in terms of reaching unserved SMEs and spurring innovation. The main objective of SCBD is to support finance initiatives by de-risking and scaling up the proposition to attract following capital. And in 5.5 years now, the SCBD team has built up a diverse and impactful portfolio of around 20 million euro in 19 investment initiatives across 3 continents and multiple asset classes. Through these investments, we have finance around 750 SMEs, 37% of which are in fragile countries, and 181 young entrepreneurs leading these SMEs. To date, our investments have been able to achieve some follow-on capital in the magnitude of around 5.7 times. So if we invest $1 million, then they go on to raise around 5.7 to 6 million, which is really great and unheard of sometimes in these types of geographies. In terms of COVID responses, we have been very active by providing technical assistance solutions to manage cash flows, create business continuity plans, and disseminate knowledge across entrepreneurship networks, and also by providing emergency working capital through interest-free loans to our clients. And our clients are financial intermediaries, not the MSMEs themselves. So we are sort of two levels above MSMEs, but still with a strong focus on MSMEs. And concretely, I have two examples that I want to showcase. On the right-hand side of the slide, a call to business, ACTV, not to be confused with BCtA, was the only MFI to remain open in Sierra Leone during the Ebola crisis. And in order to be able to repeat that feat, they came up with a community healthcare communication initiative, which would reach close to 20,000 of their clients, which are mostly at rural and peri-urban areas. And as respected business leaders, then they would pass on these messages to their communities. ACTV now estimates that they have reached at least 700,000 people, which is roughly 10% of the population in Sierra Leone. So they have been crucial in alleviating the healthcare infrastructure for the country. And we've supported them through a grant to get this initiative going. At the same time, a fairly similar, but not equally, not with the same type of support, we came into the Nepal Impact Investing Club, which is the only impact investing fund in Nepal where the prolonged lockdown has weakened the revenue generation and cash positions of their portfolios. So a liquidity injection was really needed for these MSMEs to weather the crisis, as their operations essentially came to a complete halt. SCBD contributed in the form of an interest-free loan to be deployed then at 0% to the MSMEs within NIC's portfolio. And these facilities would allow pretty much all the MSMEs to retain around 130 jobs, which would have otherwise been lost. So it's what we're really doing through this COVID crisis has been something new, something that we had to develop fairly fast. And it has been instrumental in keeping our portfolio and their subsequent portfolio as well from coming crashing down given the pandemic. I hope that through these types of seminars and webinars and congregations, we are able to unlock even further capital for MSMEs. Happy to yield back my time so that we can get over to the questions.
Thank you very much. So let me ask all my panelists to turn their video on and join me here on a conversation, if I can, please. Dr. Nasser, whenever you can, please turn your video on. Let me start with Andrea here. You know, you've described the amazing support and that MasterCard has been putting in place for SMEs. But, you know, the world is very changing. You know, we've got lockdowns, we've got all kinds of stuff that we are all living through everywhere in the world. And giving that importance and giving that commitment to SMEs, to MasterCard and the importance of the global economy, in your experience, what is the best way to get the small business access to the tools that they need most in today's world, and how much of that is going to carry on as we come out of this crisis in terms of making sure that they access the tools that you have that you've developed?
Great. Thank you for that question, Marcos. I think it's an important one. And so one of the first things that we need to do when we think about how do we reach the SME community and provide them access is make sure that what we're providing is what is needed. And so one of the first things that we did is, as we made our 250 million commitment in support of SMEs across the globe, was to step back and reimagine and rethink how we can bring capabilities and innovation forward to meet their needs. And so what we saw was that there were kind of two key needs that really were very strong and prevalent across the globe. And the first is around getting cash in the door. And many of my panelists have talked about those opportunities. And that's inclusive of helping them get paid more quickly, as well as get access to microloans and things like that. But the second area that was so critical was helping them make this transition to digital. And so I'd like to spend a little bit of time talking about that because that is essential. And then the way, as we bring these capabilities forward, the way that MasterCard always works is to partner very closely with our customers, with our partners, with governments across the globe to reach the SMEs with these capabilities. So one of the things that we found when we stepped back and looked at what was happening in the economy with COVID, and I think we also all know this very much from our own personal experience, that we all were looking to transact in a way that was socially distanced and digital. And as we looked at the data, we also saw that businesses who were able to make a transition to digital more quickly spent less time being shut, were able to open more quickly, and we're actually able to start driving more revenue and revenue growth. So that was really important to us. And so what we decided to do was create essentially a digital acceleration program that would bring forth our assets and capabilities in partnership, again, with our partners and our customers and governments across the globe to help these small businesses get more digital. And so that includes things like being able to accept payments in a digital way. That includes things like being able to protect themselves from cyber threat. Many businesses have never been online and needed to learn how to do that. And that also gets to another key point. It's a lot about the training, because a lot of these businesses don't know how to establish a digital storefront. They don't know how to market and reach to their customers. And so there's a big, steep learning curve and information that we needed to get out there really fast. And so as we did this, we brought forth these programs, these digital acceleration programs in many markets across the globe. So maybe I can just give you a few examples to highlight how this works and how the capabilities are different depending on the region and the market. And so for instance, in LAC market, we were bringing forth a lot of call for our cyber capabilities to protect these small businesses. And then what we did is we established partnerships with companies like Mercado Libre and Facebook to help these businesses set up a digital storefront and also to reach their customers. In the US, we did partnerships with partners such as Hello Alice and Squarespace, again, really focused on digital storefronts and training. We also brought forth new capabilities so that businesses could let their customers know they were open, a site called shopopenings.com. And we also have started working on a digital diagnostic, so businesses can really quickly and easily self-assess where they are on their journey and find the right tools and capabilities for them. In India, this looked a little different, right? So one of the things that we really wanted to help with businesses there was how do they safely reopen while meeting the local regulations for safety. And so we used a lot of our philanthropic aid to actually help them deliver kits so they could really safely reopen their stores. We're also doing a lot of work there in getting credit and capital out to these small businesses. In partnership with the US government, we have mobilized 100 million in capital to businesses in India. And then last but not least, another example, South Africa, a big focus there, in addition to digital storefronts, was making sure they could create a digital way to accept payments that was cost effective. So we launched new capabilities that would turn essentially a smartphone into a point of sale system. And so again, just really in summary, it's about making sure we have the right products, solutions, and training that these small businesses need now, and then working really closely with our partners and our customers in each market across the globe to reach the businesses with what they need.
Thank you very much. And I think it's very good, the demonstration that things, there is no one solution to every context. And I think your sensibility to adjust this program to the different contexts is very good in that sense. Dr. Nasser, let me actually bring it. One of the things that we've learned in the last 6 months of COVID is that COVID affects almost everyone, but it doesn't affect everyone equally. Some people are more affected than others, right? One of those members of communities that are most affected tend to be women, right? In that sense. So AG Fund in the Arab region and in Africa has a strong focus on women empowerment through financial inclusion banks. So what strategies have been more effective in enhancing women entrepreneurship and financial inclusion in low-income markets for you, and what changed during this COVID element in reaching out that women population that matters so much for the AG Fund?
Thank you very much for your questions, and particularly, as you know, AG Fund priority is women since inception 1980s. Whatever we do, even in financial inclusion, we give a priority for women. And as you know, since the inception of AG Fund until now, we give priority to women in terms of social and economics. As you know, AG Fund had been creating a counter center with cooperation with the UNDP, UNFPA, etc., to be the arm for technical assistance to provide AG Fund and respond when the need of women. One of that area we've been doing it is financial inclusion, financial literacy, which we've been helping women all over the world. How can we include them and educate them and make them ready before COVID-19? As you know, AG Fund been doing this banks, 9 banks, almost 65% of our clients are women. As I mentioned in the beginning, when Ebola happening in Sierra Leone, one of the area we start talking to women, not to tell that woman she's a poor woman. We tell this is a woman as an entrepreneur, as starting their own business. So moving from poor and remote area to be on their own business and getting access to a small loan, which has helped them during COVID-19. The thing is this is happening for everybody. This is more type of find it. There is a business already being equipped with online. The women who already been digitalized in their own business, they are surviving and they are easy to help them and they move on. Some of their businesses is partially survive, which is a woman who has a business and they do their, or they reach their client or do their services or product at the local of their own client. This is partially is continue. The problem is what we're facing is the women who have no access to digital. And this is one of the problems. And believe me, wherever we are, if there is more digitalized, more financial inclusion, it's make us to respond easier and quickly more than the one we do it. Believe me, doing this and helping this, partially when you do and helping women, you do them even when do financing. Believe me, when we're talking to a man or woman, we find women need financing, but they always have a clear vision, how do they need financing? Because they always need their own financing, a gradual financing that based on their actual need. So whatever money you give it to the business women, it's always emphasized to help their own family and society and their nation more than if we go it to a man. And this is one of the strong points and which make Ag Fund is different wherever we do. That's almost 60% of our client as women. At the same time, we in Ag Fund, as you know, we are associated, we have the Arab Open University to teach women in remote area. That is with the British Open University. Nowadays, during epidemic, now we are working to have online master degree because we care about two areas. It's missing for education for women, which is early childhood development for their own children and higher education if you want them to be a leader. So we are working to educate 8,000 poor women in Africa to have a master degree. And this is, we call for our friend and colleague to support it and complete it now and help them access to education. The other part of it, which is early child development, we look at for two reasons. Because if you empower women, there is a prerequisite to empower women: safe transportation and access to nursery and kindergarten for their children. How we look at it in Ag Fund, we look at this as a good, huge opportunity to give loan to women to start their nursery and education. And believe me, we did this is in Sudan. With a year, we opened 600 nursery and kindergarten. We enroll 15,000, kids. At the same time, we create a job for more than 1,000 women. Imagine that 600 entrepreneurs in Sudan, with amount of $300,000, help 15 child to be enrolled in the kindergarten children, create 100 job opportunity. And as you told you and everybody, if you want to be a chief, go and work too closely with the woman. Thank you. Back to you.
Thank you very much. I think it's fantastic examples, and as a male, I completely agree that in the end we see a much stronger return on investment, to use terms like this, on investment on women than we see on investment on men. And I commend you, Ag Fund, for that commitment for so long and for so many years in that sense. Ethan, our Tunai itself is a SME, right? So I ought to assume, as we discussed already, that this pandemic has affected you and your own operations, right? As well as affecting your clients. So maybe if you could give us some concrete examples of how the pandemic is affecting you as an SME in your own right, and your clients, and how you're trying to address those elements. A couple of stories, if you want, would be great.
Sure, thank you for the questions, Marcos. Of course, in the context of their relations, our clients with our brand, which is Awan Tunai, is a fintech company, it affects a lot their capability in terms of repayment process, because we as a company provide them with affordable loans. But something that interesting we found is this is not equally affect to everyone, because sort of like a location factor also affect a lot whether some segment will be hit harder compared to the others. So let me share you one of the story that I found when I met one of our loyal clients. He is one of our early customers and continue to use our product every month. He's basically our loyal customers in terms of his business model. He usually serve his customer around business area, like bicycle seller who sell like coffee, snacks, or drinks, and they continue to sell to employee around the building. But when our local governments try to first work from home policy, which is what we did at the moment, it impacted their business as well. There is no enough customer around their store, around their business, and they actually also give another loan to bicycle sellers as their sellers. So, and this bicycle sellers who can afford to pay and also impact the lasting for our clients, because yes, they don't have inventory anymore to sell some goods, but there is not enough money to pay to our wholesalers and also to Awan Tunai. It shows especially during early March and also continue until April. And it also affects our overall repayment performance on our portfolio. But even though right now we did some adjustment in terms of technology adoptions, we try to introduce order management system, technology that try to avoid too intensive contact between our clients, which is merchants, and also their wholesalers. And also we introduce a relaxation program to help them. So that's why starting May until right now, we already show good and growth positive in terms of repayment for us. Thank you, Marcus.
Thank you. Thank you. Giovanni, as you mentioned in your presentation, you are a fund of funds, right? So your business is with a focus, eventually, your money gets all the way to the chain to the SMEs. Now, with the pandemic, what has changed and how have you adjusted your investment decisions and how you selected, the funds of funds? Or if you haven't done that yet, what are you starting to learn for the future in terms of how do you select and how do you engage it with the funds that you invested? And how do you ask them to work with the final clients? What has changed for you?
Great question, Marcus. I think you're asking me to reveal our secret sauce, which I will a little bit, I guess. So I guess it's a two-part question, right? For the first part, pre and during COVID, and then now how we're selecting. So for the first part of it, at the onset of the pandemic, we quickly saw three core issues. The first one was that small companies providing non-essential goods and services would suddenly lose revenues due to lockdowns and limited movements, particularly in tourism and trade sectors. We also saw some winners in healthcare, essential goods and services, and digital players. I think digital is going to be key throughout the pandemic and even after the pandemic. Then secondly, a lot of central banks were kind enough to recommend and sometimes mandate debt moratoria, so delayed payments of financial obligations. And this was a key step to help companies in distress which could not pay down their debts. But on the flip side, this became a challenge for the local finance providers, which are our clients, particularly because local and international investors got scared and would temporarily retreat or could not step in at all to help. So what we saw happening early on was a portfolio deterioration and a really acute need for cash. And this is both at the MSME level and at the finance provider level. Luckily, most of our fund managers operate through markets and are used to having to quickly pivot. Then as COVID took hold, we identified 4 key activities which needed to happen swiftly, really. And the first one is to check for the damage. The second is to develop a technical assistance solution. The third one is to facilitate knowledge sharing. And the fourth one is to actually provide financial support. So on the first part, I think it was from the moments we knew that COVID was going to be a really big thing, we checked on the well-being of our clients, the MSMEs that they're serving, and also their families in order to make sure that an emergency working plan was in place. And we co-created a roadmap towards business continuity for them, regardless of the status of lockdowns, in order to be prepared as possible. And we assured our clients that they could receive disciplined capital to preserve the greatest possible amount of jobs if they met certain criteria. Once we sort of had that in place, we developed a series of webinars, and this is the technical assistance part, and toolkits for financial intermediaries to use in order to manage cash flows. And also to manage liquidity, because cash was really gone. This ended up with all of our clients adapting business continuity and emergency action plans. And we also saw that entrepreneurship and startup ecosystems were going to be a problem down the line if they were not kept at what they were used to. So we supported entrepreneurship support organizations. These are accelerators, incubators, and we helped them digitize so that they could share the learnings they had and the learnings we have produced with our portfolio with early stage entrepreneurs to avoid pretty much the startup ecosystems from drying up. Then, as different regions were hit at different times. So we shared lessons learned and helped investees get in contact with each other in order to share their experiences. For example, I think that it was tremendously helpful that the lockdown in Jordan was super strict, but it was fairly similar to the one in the Philippines. That one is still going on. But our investees were encouraged to take similar approaches in the way they responded. And from our portfolio in Africa, I think we drew a lot of the lessons learned from the Ebola crisis, and we were able to hand off information where lockdowns were not as strict. And once these first steps were complete, we would really talk about potential funding to come into the door. So in that term, we provided 0% emergency working capital loans and repayable grants to our clients so that they can in turn deploy them to their clients at 0% with a long-term perspective. So matching their cash flow potential to their future debt repayment obligations. This has allowed them to remain open and keep their workforce intact during periods of time where really no revenue is being generated. And now, as we sort of enter the new normal, we know that access to finance will become an even greater problem. Capital, if not fleeing, is at least frozen, and with MSMEs having an already difficult time accessing financial instruments, they will have an even tougher time breaking into the market. More traditional, conservative finance providers will become more risk averse, requiring more and more from MSMEs in order to secure financing. Really. But I guess there is a silver lining here. In order to close this widening MSME finance gap, we look to resume our operations as CBD and DGF with a few considerations. The first one is that fund managers and MSMEs must be flexible. And we think that now more than ever, blended finance plays a very important role because the uncertainty of the short terms leaves MSMEs really vulnerable, but at the same time open for improvement through pre and post investment technical assistance. This usually comes in the form of grants or in-kind contributions from their finance providers. And this usually tends to improve growth prospects, allowing for really more innovative instruments to be used. For example, we have encouraged our clients to use partially uncollateralized flexible loans with some sort of upside sharing, self-liquidating equity mechanisms, funkier deals, if you want to call them that way, riskier deals. But these are deals that are tailored to each one of the MSMEs. So they have to be flexible when they provide this type of things. The second, and I think my panelists have touched upon it a number of times, and we think is very important, is that digitalization has been accelerated. The digital transformation for financial intermediaries was already a priority, but COVID and social distancing requirements have now made it really urgent. For example, ESO, so accelerators and incubators are now expected to have very strong digital components to be able to share their knowledge as efficiently as possible with startups and would-be entrepreneurs. Financial institutions with strong digital channels can continue to partially operate as they'll be able to communicate with clients, continue recoveries, and pursue new loans with the added benefit of maintaining social distancing to protect their clients' employees. I think digitalization efforts will help us reach more and more of the financially excluded. And third, and lastly, asset selection must be stricter, or what we call the resilience filter. So MSMEs looking to access funding must now incorporate business continuity plans as part of their basic policies, be as tech capable as possible. Not that they have to be fully digital, but have a good understanding of their underlying technologies, and have a built-in agility to allow them to quickly act under conditions of uncertainty.
This is an interesting, and I've got some, I've received some questions from the audience, but I'm going to kind of try to amalgamate a few of them and turn back to you all here. The digital aspect comes strong. So how you are operating, you know, and how you've made it supporting to the SMEs right now. I think we at UNDP are very aware that if we don't generate that element in support, things are going to get very complicated. But then there's two elements in here that I want your opinion. I want your reaction to them. One is the public policy. Now, as you're going around and as you're seeing this, what have you encountered in terms of the public policy enabling environment that allows you to make that transformation, that helped you or hindered you? So what have you found in the public policy, and what can we as an organization that talks to 170 governments around the world take forward as public policy? The second is the infrastructure. 1.2 billion people in the world have no access to the internet. Zero. Right? 600 million people in Africa alone have no access to electricity. How can we go digital with no broadband, with no electricity? So how much is the infrastructure challenge something that you've encountered, and how do we deal with that? So maybe, you know, Andrea, if you want to take it either of both points, out of the points quickly. We've got about 9 minutes left here, you know, but over to you.
Yeah, sure. Great. Thank you. I'll take the angle about the public policy because it is really critical that as we do this, we work together. And many of the partnerships that we've struck have been with governments. And likewise, many of the advances that we're making are applauded by governments and regulators across the globe as we bring people forward into this inclusive economy. So that is absolutely critical that we do continue to work hand in hand. And I see a lot more opportunity in that. And I also see a lot of opportunity as we work forward to bring private-public and private-private together. So this idea of not just one-off, but, you know, coming forward together to support SMEs across the globe is really important. And so, you know, one of the examples we often talk about is the microcredit program that we've rolled out, that many like of my panelists here have brought local capital to micro businesses. And we've done that in partnership with other private entities like Unilever and banks on the ground, as well as working with local governments. Likewise, the example I just gave earlier about what we're doing in India is really all about working together to make sure that we're working with local governments across the globe to help these businesses get them the aid they need in a way that's relevant in their local economies.
Ethan, what is the public policy that helps you, and have you encountered the infrastructure as an issue?
Yeah, this is also related with what actually the segment that we want to cater, Marcos. Because to be honest, right now, I want to know as a fintech provider in Indonesia. Actually, if we try to divide our FMCG supply chain downstream, actually we right now only reach until third and also fourth tier. It's more definitely challenging if you want to reach out the lower tier, which is the fifth tier, that actually zero data in terms of transactions online. And definitely we need more investment in terms of technology adoptions, also more advanced risk assessment process, because definitely this is more risky area to tap in as an early stage of fintech company at the moment. And definitely we need to also create a stronger collaborations with banks and also lenders, how to convince them to always give affordable financing to even micro merchants compared to what we serve right now. We try to also tap in terms of technology adoptions, but in terms of investments, support from public policy, from governments, from banks, and also from lenders that give us investments, also needed from our side, yeah, in this case.
Thank you. Giovanni, on the public policy, as you know, you've already mentioned that central banks make some decisions, and you know, and certainly We actually have a meeting next Tuesday with, heads of states online, virtual meeting to discuss some of the most pressing finance policies that need to be put in place now and for recovering better. But what have you seen in terms of public policy? And are your clients, can you reach more clients, right? Can you reach more of your target population with the current infrastructure for digital that exists, or does that need to grow?
Oof. So I think this is a very complicated question. Yes, the current infrastructure needs to grow, but I think as I presented on the example with ICTB, they have around 20,000 clients. And most of these are in either rural or peri-urban areas with very limited access to internet, very limited access to even TV and radio. And the way they did their outreach program was through SMS blasts, which I think most of the population now has access to some sort of mobile capacity, even if it's not a smartphone. So I think in that sense, a lot of technology that can be created can be analog, and it will allow a lot more of our clients to be able to reach the MSME targets that they want to reach in rural areas. In terms of policy, we have seen a lot of finance providers to turn their head more towards revolving facilities, right? So instead, we understand that the grants usually come in to fund public goods, and they're fairly effective there. But in terms of MSMEs, revenues are actually the lifeblood of those, right? So if we bring in distortive vehicles into the market, so just pure grants in order to finance MSMEs, we pretty much end up distorting both the financial system and both the revenue generation capabilities of the MSMEs. So what we have seen with our partners when we fund initiatives like this is that we try to be aligned as much as possible in the sense that the grants should flow back to the finance providers so that they do not become distorted. So that they do not finance financing costs, supplier costs for the MSME. And that, I believe, has been an overarching theme that has been approached, at least with our partners, and that has been approached by the Ministry of Foreign Affairs of the Netherlands.
Thank you. Dr. Nasser, we've got running out of time, but one little comment from you on the issue of policy.
Thank you very much. I guess the policy is the backbone of financial inclusion. You remember, Mark, since 1997, we've been trying to talk to central bank all over the world to have a legal environment for financial inclusion. I believe global policy is a must. As you mentioned right now, as digitalization, if we look at it, we don't want to complicate it. Let's make it easier. 90% of people in Africa, they have mobile. Regular mobile, not a smart mobile. And through the regular mobile, we could do transfer remittances as money and paying their money. So we don't want to complicate it, because the thing is this: we need central bank to have globally, AgFund even talking to the G20 through B20 to push through having a global policy to introduce a small farmer to be a micro enterprise, which is be included in the financial system. Imagine through mobile. Look at an example of mobile. Right now, I could even transfer through wallet. The thing is this: we need to make it easier. KYC to receive a mobile, it's the same as KYC to open an account. Right now, if you go back and you make it easier, right now we transfer even the money. Is it cheaper and easier if you use the mobile wallet? By having the money, it costs me almost $1 to transfer the money. And remittances today, the impact of the money coming from remittances have an impact more than the technical assistance we're given to the countries. And right now, if we make it, and costly through the only way we do it through mobile. Imagine today that we transfer money in Yemen in a place there is no road, no car could reach there. While through mobile, I could transfer the money and I could even give you a statement where did they spend $100 Brently and where they spend it. So public policy is must to a global policy and reflect to the physical policy. And we needed very simple infrastructure to include the poor people. We do want a smartphone. We need a regular phone to do that.
Thank you. Thank you very much. Thank you very much. We're out of time. I want you all to thank our panelists. It's been a fantastic conversation. And let me just by saying that, listen to the four of you, a very large company like Mastercard, our SME in Indonesia, a fund of funds and an ag funds. What I take out of this is we are in difficult times, but you give me hope. You give me hope that we are able to come out of this with our SMEs in a much stronger position. Thank you very much, everybody. It's a pleasure. Thanks for your time. And anyone listening to us here, take the hope with you. Shop small, shop SME, and let's make it all come back together. Thank you very much.
Thank you.